You don't consider the valuation of your company that important then, or even if only as a currency for things like stock options, etc. I'm not even sure what the valuation of Zoho now. I mean, you have some peers like HubSpot, which lend itself to some kind of market value or market cap comparisons. But could you share with us, A, what your likely valuation today is, and whether valuation is important in your eyes at all?
I truly don't care about valuation. I have not actually paid attention to that at all. The press may write about the valuation, but I have never computed it. I haven't cared about it. What matters is, do we have enough resources to invest in the areas we are investing in, all the R&D we're investing in? Are we growing steadily? And do those products come to fruition, long-term R&D we are investing in? Do we keep our employees happy? Do we take care of them well? Do we keep our customers happy? Those are the concerns I have. And that's I consider that a luxury we can afford because we are private. And that's, essentially I get to ignore our shareholders, which is something that most CEOs would love to do, but they cannot do, that I can afford to do. And if I go public, I cannot do this. There will be, I'll have to report to shareholders every quarter. And that's not something I want to take on that burden. So that's why we are this way. And the valuation is something that I've never paid attention. I know, see, again, this is the wrong way to think. I mean, if I said this as a venture capital company or a public company, I would not have my job very long. But that's why we stay private.
Yeah, you have the luxury of doing that. But do you think that is really the core of, or one of the core problems that is afflicting the digital universe in India today, that they put the cart before the horse, they thought of valuations before growing the business, and which is why all these problems are coming up with these newly coined unicorns over the last few months?
Absolutely. I mean, take the word unicorn itself. That's considered $1 billion in valuation. But as we saw, that valuation could come and go easily, could evaporate. I mean, we saw FTX, a company worth what, 32 billion, vanish into zero. Just the last couple of weeks, the crypto trading company, FTX. So what was it was 32 billion a month ago and zero now. So I don't consider these valuations all that meaningful. And in any event, what happened when you make valuation the real metric, when there's a stock market bubble, as it happened in the last year or so, the last few years, you got extremely hyperinflated valuations, and which has started driving, that became the principal objective for companies. It severely distorts your decision making. You're not running the company to benefit customers or even employees for that matter, even though you'll argue that employees have stock option, they benefit from the valuation. Well, they don't. You have lockup periods and whatnot. So employees cannot sell these shares easily. Even companies that went public with a 6-month lockup period, there wasn't enough window of opportunity to sell at those inflated prices. Prices came down quite a bit. So in a sense, these valuation obsession cost companies dearly in terms of market execution, in terms of R&D execution, all of that. And this is the cost of bubbles. Bubbles always cause economic damage long term. And we saw this in the startup sector. Resources got sucked into companies whose only focus was to inflate the paper valuations. FTX is a classic example of that. They sucked in a lot of resources in terms of R&D talent, people, and marketing, all of that, and now at zero. And this, to a lesser extent, reflected across the landscape, which is also the reason, I wanted to stay away from these bubbles. I wanted to stay away from the focus on valuation. That's also a reason why we stay private.
If you like the video, do like, comment, share, and subscribe.